I was being invited to media interviews nonstop. And one of the things they asked me to do is go on and debate whether crypto is in a bubble. And so the interviewers or the journalists would stick a microphone in my face and go, "Do you think crypto is in a bubble?" And they were hoping I'd say no. And I was like, "Yeah, of course it's in a bubble." And they deflated me. They were like, "Oh, come on, where am I going to go with that answer?" Like, I was hoping to go to the other guest who was going to call you an idiot for saying it's not, right? But they just deflated my balloon. And so of course it's in a bubble. It's a very obvious and very extreme version of a bubble. But keep in mind, so is real estate, automobiles, student loans, healthcare, education, the stock market, the bond market, the asset market, the commodity market. And in fact, all of those are quietly in some of the worst bubbles we've ever seen, driven by $21 trillion of debt in the US and massive stimulus spending by all of the central banks. And nobody's calling them a bubble. And if they burst, we're going to have a much bigger problem on our hands, right? If crypto bursts, yeah, people are going to get hurt, but it's a fairly limited number of people on a fairly limited capital basis who the craziest of them invested big parts of their net worth, but most people didn't. But when the real estate market or the jobs market or corporate bonds crash or currencies crash, it takes entire countries, it wipes out the middle class, it causes long-term generational destruction. None of the journalists want to talk about that. Right. When I steer the conversation in that direction, I'm like, yeah, guess what else is in the bubble? The S&P 500. Like,
Right, don't want to talk about that.
Yeah. And then, of course, the crypto people didn't want me to talk about that. So I go out and I do an interview, and I remember it was a podcast, a popular podcast, and they asked me, is crypto in a bubble? I said, absolutely, it's in a bubble. Of course it is. In fact, I expect we're not going to go much further, and I'm really worried about the pace of this. It's going to cause some damage. The very next week, they did another podcast in another place talking about this interview, and the screenshot, the thumbnail, was me in a Darth Vader mask, and the title of the thing was, "Has Andreas gone over to the dark side?" Because I said the B word, I said bubble. And I was like, how could you say it's in a bubble? This is...
Because you're such an advocate of the currency, they didn't
Yes,
expect you to say that.
I betrayed the doctrine by saying it's in a bubble. Yeah, it was a bubble, and it was ridiculous. And as soon as it finished, I was very saddened by the fact that I knew a lot of people had been hurt. But I was like, okay, now we can get back to work. Now we can start building. And I actually started writing my fourth book.
Okay.
Just about a week after the bubble burst.
Okay, and so we've been in that winter now for what, a year and a half? And what is that?
Actually, we popped out of the winter about a month ago.
Okay.
At least of the deep freeze.
All right, and Bitcoin started going up.
So it went from about 20,000 down to, I think the lowest was about 3,100 US dollars. And then over the last month and a half, it went back up past 9. And then in the last couple of weeks, retrenched a bit, and is now at about 7,900.
Okay.
Yeah.
All right.
So, and these cycles keep repeating. A lot of people forgot about it. And then the funny thing is that one of the things that gives us strength is people hear that this bubble thing has happened, and they're like, okay, so it's dead. You see, the quintessential thing about bubbles that are not based on any fundamentals, like tulip bubbles, is they burst once. That's it. They never reinflate again. Cyclical growth bubbles, which are in things that actually do have foundation, like real estate going, or in a whole economy, growing fast and then going through this kind of cycle, or crypto, which actually some of it does have fundamentals behind it, reinflates again. So now we had another big run up. I mean, it doubled in price in a month and a half, which is, again, too fast.
Right. But now it's in play again, and we're going to start to potentially see similar behaviors.
I hope not. I hope people learned.
But if you look at the price action over the last 8-10 years, it's coming again soon in the next 12 to 24 months. There'll be another breakthrough, and guess what? It'll probably go over the previous price.
I don't know. Maybe not. I mean, it might keep going down again, and we may end up back in the negative territory. I don't know. Don't care.
Don't care.
What I do care about is that over the past 2 years, what has happened is a lot of the money that flowed in obviously turned into investment. A lot of people got jobs and got hired, and some of them were developers and big exchanges and wallets and things like that. They were able to use some of the appreciation in price for their holdings to invest in infrastructure, to build better operations center, to hire more customer service people so that they could better withstand the next cycle. And out of that comes better software and more development. So developers have been hard at work. They really never stopped. The community's grown. And once again, you get to see who's really in it for the technology and who isn't. The ones who weren't, bye-bye, see you later. And, you know, we're hard building, and, you know, I've been building an education machine, effectively, to be able to scale what I do and get it to more people.
Okay, well, good. I want to talk about what you think are the 5 pillars of open blockchains, because I think the way you describe it is really important. Mm-hmm. I was just having flashbacks. I was in the .com boom, so I moved to New York City from London in around about July '99. And I was the CFO of a .com startup, had about $20 million raised. We were selling luxury goods on the web. We had no idea what we were doing. And I remember going out with all my buddies in New York City and just giving them the whole .com, this is the future, Columbus in the new world, what was his ROI, and wrote it all up. And I remember in like 2003, there was some company called Google, and I just remember thinking nobody wants to even hear the word technology because it was just played out, disgusting. I don't even want to hear it because I want to move on to something else. And that's why I ignored something like Google, because I was like, no one cares, no one wants to know. When in fact, Google was obviously great technology and really useful stuff, and it became another great company.
And what people forget was Google wasn't the first search engine. It was the 21st search engine. And in order for it to succeed, 20 other companies, big, well-capitalized, well-researched companies failed. And that happens in any technology.
Yeah, railroads in America, it was a lot of the same thing. A lot of these massive companies build up, competed with each other, and then bankruptcy, consolidation.
But that's actually a normal and even healthy way for capitalism to work.
Agreed.
You break it if you try to bail out the companies during their bankruptcies, because then companies that shouldn't survive. And that's a disadvantage to the ones that are actually healthy, because they don't get to pick up on the market the employees, the capital goods, the infrastructure that gets liquidated in bankruptcy and put it to better use because they've been doing better business. And one of the advantages of this kind of washout cycle is that it takes out all of the pretenders and all of the badly chosen ideas and all of the bad execution, and of course the scams. But the infrastructure that they built up, the people who they hired and trained to build systems, that knowledge is still there. Yeah. A lot of the infrastructure is still there, and it gets recycled. And so other companies then pick up employees and go in on a hiring spree. I hired more employees in the last year and a half than I did during the boom cycle.